At their core, financial markets are sophisticated platforms or arenas where a diverse range of participants, including buyers and sellers, convene to exchange or trade financial assets. These assets encompass a broad spectrum, such as equities, often referred to as stocks, debt instruments like bonds, foreign currencies, and tangible commodities such as gold or oil. These assets enable efficient resource allocation within an economy, allow risk distribution, and offer a way for entities, particularly companies, to amass capital for expansion or operational purposes. The fundamental economic principles of supply and demand influence the prices of assets within these markets. When demand for a particular asset increases, meaning a higher number of investors are inclined to purchase it, then those willing to offload or sell, its price escalates. On the flip side, if more investors divest a stock than procure it, its price drops. A major advantage associated with financial markets is the provision of liquidity. Liquidity signifies the ease with which assets can be converted into cash without a substantial loss in value. This ensures that investors can access their capital when required. An important part of the financial landscape is stock exchanges. NASDAQ, or National Association of Securities Dealers Automated Quotations, has become synonymous with technology centric listed companies. Titans of the tech world, including Apple, Microsoft, and Amazon, have their listings here. NASDAQ functions as a dealer's market. This means that transactional activities are orchestrated via a dealer, rather than a direct interaction between the purchasing and selling parties. The NYSE, or New York Stock Exchange, is one of the globe's most venerable stock exchanges. It adopts an auction based operational methodology. Here, prospective buyers place their bids while sellers quote ask prices for their equity shares. The transaction materializes when the highest bid aligns with the lowest ask, facilitating the transfer of shares. Positioned as the linchpins connecting buyers and sellers, brokers can either be individual entities or institutional firms. They are bestowed with licenses that empower them to orchestrate the purchase and sale of securities, acting in the best interests of their clientele. Financial indexes are aggregates or consolidated baskets of stocks curated to provide insights into the health and trajectory of the broader market and its specific segments. Dow Jones Industrial Average, or DJIA, is a composite of 30 pivotal U.S. corporations. It often reflects the vitality and direction of the U.S. equity market. The S&P 500 encompasses 500 of the largest U.S.-based corporations. It includes nearly 80% of the total market capitalization, offering a comprehensive view of the U.S. corporate landscape. NASDAQ Composite is an inclusive index that combines all entities listed on the NASDAQ exchange, with a pronounced emphasis on technology-driven firms. The Securities and Exchange Commission, or SEC, is the sentinel of U.S. financial markets. The federal agency safeguards investors, endorses the integrity of markets, and fosters an environment conducive to capital generation. It enforces federal securities statutes while supervising various entities, including securities exchanges, brokerage firms, and investment advisory bodies. Financial markets represent intricate webs of interactions and transactions, bolstered by a framework of regulations and facilitated by entities like banks and brokers. By mandating detailed financial disclosures, regulatory entities ensure that corporations maintain transparency, fostering informed decision-making among investors. Regulatory authorities defend against deceitful activities and practices that could jeopardize investor interests. By implementing stringent standards and best practices, these bodies enhance the resilience and stability of the financial markets. Beyond the conventional roles of safeguarding deposits and granting loans, banks play an important role in financial markets. They act as facilitators for transactions, offer strategic advisory services, and even partake in proprietary trading, which entails trading securities leveraging their capital.